All the largest money managers in the world know there is a way to get rich on the stock market. It's called options trading. This is your Minister of Capitalism, Brett Davison. And today I'm going to investigate the question, is it possible to get rich on the stock market with options trading? And let me tell you up front, you don't have to be an expert or spend hours staring at your screen for this strategy work. All you need is some basic knowledge and an understanding of risk management. And I will even give you a shortcut that you can take if you want it. Options are an exciting investment instrument. You can use them as a way to protect yourself from unexpected changes in stock prices or as a way to leverage your money. Options offer protection against the price fluctuations of stocks, but they also provide investors interesting ways to profit off their investments without having to risk very much capital. It's time for you to invest wisely, so keep listening. The big question a lot of people are asking is, how can I get rich trading options? Well, for starters, you could use all of your cash to buy calls on your favorite growth stock with the expectation that the stock price will absolutely skyrocket before those options expire. And since an option contract represents 100 shares, you can profit by controlling a lot more shares than if you had to buy the same amount in stock. Of course, there is another direction you could take if you thought a stock was going to drop instead. Say a company is about to go bankrupt and no one else knows about it. You could buy puts before they declare bankruptcy, and when the story of their bankruptcy hits the market, your put options would increase in value before your very eyes. A different way you could trade would be to sell a lot of naked puts on a stock that you expect will keep increasing in the future. The more volatile the stock is, the higher potential for profit because these naked options are set at specific strike price levels, allowing traders to make profits if they're right about where an underlying asset's going. You just need enough cash in your account to cover the trade, as your broker will require additional collateral in case the trade goes against you. There are even more strategies you can use to become wealthy. That said, those strategies often have more in common with gambling than trading. With that in mind, it is important for aspiring traders to understand the strategy they are using. Trading options can be a great way to make money if you are careful, but a trade may not always go your way. You need enough trading experience and investing knowledge before you actually start trading with options. There's no harm in doing some research first so that you know what risks lurk behind the trade you're about to place. You might think options are a quick and easy way to make money, but you will be disappointed if that's your goal. Options traders are always on the lookout for ways to reduce risk and increase their chances of making money. But I think there's a better question that people need to be asking themselves rather than, what do I need to get rich with options? The real question you should be asking yourself when trading options is, helping you remove luck from your trades? Or put another way, how do I lower my risks in option trading? Options have long been used by investors as a means for lowering risk exposure. The task of predicting the future price moves of a stock isn't always easy, but it is possible. That said, you have to hone your skills with a lot of practice and study. When you trade in equity, the marketplace, always keep in mind that there are no guarantees for success on any given day. However, it never hurts to make educated guesses about the general direction in a stock's floor or ceiling. In determining a stock value range and where it could be headed, it is important to not only understand the company's product and its market position, but also how it compares with competitors. What are their strengths? What competitive advantages do they have over others in that same industry or niche? The leadership of the company can play an influential role on stock prices too. If they are investing money into the growth of their firm, then it gives a positive long-term signal. Chart patterns can be used to predict future movements in a given company's stock as well. And while the past performance of these charts is no guarantee for future results, they are used by a lot of trading algorithms, so history in regards to chart patterns can actually end up influencing stock prices. Other traders use fundamental analysis to guide their future expectations. If you want to do this, you should learn how to read quarterly financial statements, because they can give you a good idea of the company's intrinsic value or fair price for its stock. You don't need to be an accountant and take accounting classes, but at least gain some understanding by looking over important factors like free cash flow, debt, margins, etc., so that when it comes time for investing decisions, you will know what's worth your while. There are many factors that influence a stock's price, such as sentiment, news stories, and so on. Establishing fair value prices provides you with some guidelines for the stock's value. Once you have established this, it's time to use an appropriate option strategy based on your level of acceptable risk. There are all kinds of tools you can use, like trade scanners from tradideas.com, or you could subscribe to an Options Trade Alerts membership, like the exclusive one we run inside the Empirical Collective. For record, we don't give our members any complicated options trades to place. We focus on just buying calls or puts. We don't provide alerts for selling options at the moment. The second thing that every options trading beginner should do after getting up to speed on the basics is to understand their personal tolerance for risk. This is because not all investments will be appropriate for how much risk you can stomach, and it will largely depend on how much money you can afford to trade with. Different option strategies can produce very different levels of risks and will have different trade capital requirements. For each contract, you are at risk for however much 100 shares costs at the strike price. If the stock goes to zero, you lose the entire amount invested. But on the other hand, with long calls and puts, there isn't any limit on how much money you can make if the stock keeps going up. Risk is not just about how much you stand to lose on a single position, it also includes the odds of you taking that loss. You can think of that as positional risk, but it's also important to consider portfolio risk. For example, options trades will affect your portfolio's buying power or margin in your account. The market is a volatile beast, and there's no telling what it will do next. So you don't want to overextend yourself and risk experiencing a margin call. So you should use caution when placing trades. Because if you don't, you might find yourself forced into selling all your positions if things don't go as planned. When trading, always have a plan and stick to it. Know ahead of time what your exit point is for each strategy or position you take on. Keep adjusting things if necessary based off the market conditions, but don't get too emotional when stuff goes bad. Sometimes you might be able to roll out your option trades in order to save your trade. If you manage your risk and spread it out, then a few bad trades should not affect the general long-term performance. There are many people out there who will try to dissuade you from trading options for one reason or another, but if you follow the steps we've gone over here and use a well-thought-out strategy, then you stand a good chance of making money. We all know how much work goes into being an option trader, researching stocks with great potential, choosing our favorite strike prices, figuring out when they're going to expire, and the list goes on. To be honest, most people just don't have the time to be able to stay on top of it all. That's why I highly recommend that they sign up for an options trade alert service. By doing this, they are effectively outsourcing their options trading work to a pro. Then they can just sit back and trade the alerts that they think are good trades. And if that sounds like something you'd like to do, you can join us inside the empiricalcollective.com. Once you do, you'll get access to our exclusive trade alerts and our trade win average that blows the competition out of the water. So if there's room, join us inside the empiricalcollective.com.